Nasdaq, S&P, and Dow will look for direction after U.S. House passes Trump's major tax bill. May 23, 2025. Wall Street major averages look for direction on Thursday, while a bond sell-off in longer-term maturities picked up pace after the U.S. House narrowly passed President Trump's One Big Beautiful tax bill. The benchmark S&P 500, SP 500, was near even. The Nasdaq Composite, COMP-IND, was plus 0.5%, while the Dow, DJI, was minus 0.2%. The 30-year Treasury yield, US 30Y, ticked higher, last up 2 basis points at 5.1%. Other maturities were mixed following a bruising bond sell-off in the previous session. The 10-year yield, US 10Y, was lower by 1 basis point to 4.58%, while the 2-year yield, US 2Y, was down 2 basis points to 3.99%. The U.S. House narrowly passed the multi-trillion-dollar sweeping package with a vote of 215 to 214, after days of marathon meetings and intense negotiations. The One Big Beautiful bill will now head to the Senate, where it is expected to meet sharp resistance. Stocks sold off in the previous session and bonds sold off sharply, pushing yields higher with a weak Treasury auction spooking traders already worried about the debt implications of the tax bill. The most troubling part of the market reaction to the auction is that the dollar, DXY, is weakening at the same time, Deutsche Bank's George Saravello said. To us, this is a clear signal of a foreign buyer's strike on U.S. assets and the associated U.S. fiscal risks we have been warning for some time. At the core of the problem is that foreign investors are simply no longer willing to finance U.S. twin deficits at current level of prices. It is hard for U.S. equities to stay resilient in this environment, Saravello's added. The 2023 to 24 period saw a combined rise in U.S. yields and equities as the market was revising U.S. growth expectations higher. This was entirely reasonable. Today is very different. It is all building the fiscal risk premium into U.S. assets. It is hard to make the case that such a negative driver of the rising cost of capital is positive for risk assets. The details of the budget are constantly changing, so their effects are hard to judge, but the broad impact is to push the U.S. further along a rising debt path, UBS Paul Donovan said. Bond investors are less than happy. Economically, quite a lot of the budget is extending existing tax cuts, which does not add to growth. Removing taxes on tips might push inflation higher than reported. On the economic calendar, the S&P Global US Composite PMI rose to 52.1 in May's flash estimate, exceeding the 50.3 consensus. Mortgage rates of around 7% are high enough to discourage many new buyers, while the big gap between market rates and the average rates on existing mortgages is encouraging many existing homeowners to stay put, also reducing the number of homes coming on the market and keeping prices relatively high. By Seeking Alpha, May 23, 2025.